You got $1,000. Great. Now let's talk about how you can turn that $1,000 into something a whole lot bigger by investing it. What's up everybody, I am Jaspreet Singh from theminoritymindset.com where money minds rethink rich. I think more and more people are finally starting to realize that investing is the real secret to building wealth. But if you have $1,000 to invest, where should you put that $1,000 this year to turn that $1,000 into something a whole lot bigger? To really answer that question the right way, you gotta ask yourself, is this $1,000 the only $1,000 you have? Or do you have $1,000 today and then you can add more money to your investments over time? I want to start by talking about here, assuming you only have $1,000 to invest and that's it. So you're going to take this $1,000 and put it somewhere and then you're going to let this money grow, assuming you only have $1,000. Then I'm going to get into what if you have $1,000 right now and then you can keep investing more money every month or every year. If you only have $1,000 to invest and this is money that you've been saving up, getting ready to invest, and you want to put this money somewhere, that way you can grow this $1,000 into something bigger, then the stock market or your traditional investments are probably not the right place to go, because if you put $1,000 into the stock market and let's assume you can get a great return, you get a 50% return after 1 year, that means after a whole year of investing your money, you're only going to make $500. Now, a 50% return is an amazing return, but $500 is not really going to change your life. So your goal should be to use this $1,000 to create more income. That way you have more money to invest in things like the stock market, and I'll show you why. But before I do that, I need you to do me a quick favor and invest in the thumbs up button below. If this is your first time investing money, then chances are you are probably going to be a little bit scared or a little bit hesitant because you don't want to lose this hard-earned $1,000. And so you might be looking for something that's low risk. And for a lot of people, that might mean investing your money in the bank, in your savings account. The issue with that is right now, at the time I'm recording this video, the average savings account in America is paying out something like 0.05% a year. That means if you put your $1,000 in the bank for 5 years, so you didn't get to use this money for 5 years, you let it sit there and compound in your bank at 0.05% a year for 5 years, then after 5 years, your $1,000 would grow to a whole $1,002. You made $2 after 5 years. It's not worth it. Your money, your investment is safe in the bank, but it's not making you any money. So you are never going to build wealth. You are never going to get rich at this rate. The next level higher after savings account for the majority of people is then a bank's CD. A CD is a certificate of deposit, and this is where you put your money in a bank account, but you're not allowed to pull the money out. So if you put your money in a 5-year CD, your money is locked up with the bank for 5 years and you cannot access your money for those 5 years. And if you do try to access that money, then the bank is going to charge you a huge fee. The reason I talk about CDs is because back when I was in high school, my math teacher told me multiple times that the best place where you can invest your money is a CD, because your money is safe and you are going to get a guaranteed return on your money. So you tie your money up in the bank, you get a guaranteed return. It's better than a savings account, but the only problem is you don't really make that much money here either. Right now, the average CD in America is still paying less than 0.5% a year. So if you invest $1,000 in a CD for 5 whole years, now your $1,000 after 5 years and after your money being tied up for all 5 years is going to grow to a whole $1,018. You made more money than here, but you still only made $18 after 5 years with your whole $1,000 investment. Now, if we move away from the bank products and you invest this $1,000 into the stock market and you can get an average 7% return for all 5 years, then after 5 years, your $1,000 investment will grow to $1,400. That's a lot better than here, but you're still making less than $100 a year. So this is not life-changing money. That's why if you only have $1,000 to invest, I want you to be a little bit more active with your money. That way you can create more income so that you can invest more money here. There's 2 ways that I want you to invest this $1,000 right now. That way you can start attracting more money so you have more money to invest. The first way is by investing in your mind, by learning a skill. You need to right now invest in your knowledge. That way you have some value that you can give to the world, because if you have more value that you can provide, the world will pay you more money. This can mean buying books, buying courses, or attending seminars. Right now, you just got to be absorbing knowledge. That way you have more value that you can provide to the world. I mean, you can learn things like digital marketing, you can learn affiliate marketing, you can learn coding, you can learn design. You just got to learn some value that other people and other companies need. That way you can start making more money. The second thing that I want you to do is now invest in actually creating that income. The great thing about being alive right now is it is more accessible than ever to create a new income stream on the internet. So anybody can do this. The downfall is you got to be the one to kind of go out of your comfort zone and find a way to create this new income. I started Minority Mindset with less than $1,000. I don't even think I spent $500 when I started Minority Mindset. I started the company by making YouTube videos with my cell phone in front of a white wall. That was it. The only thing I spent money on was like a $25 tripod on Amazon and a couple $20 or $30 lights. That was it. I don't have any fancy editing software, no fancy microphones, no fancy cameras, no fancy equipment. I just started talking in front of my phone. I invested a lot of time on my end. I spent a lot of time learning how to make videos. I spent a lot of time making videos, and I spent a lot of time trying to learn how to not be awkward on camera. Although I'm pretty sure I'm still awkward on camera. But we were able to grow from that small investment of less than $1,000 to now a full financial media company where we have a daily financial newsletter. We have like a dozen writers writing for our blog every single day, and we have an awesome office and a really cool downtown. If you only have $1,000 to invest and that's it, right now you gotta invest in your knowledge first. So books, classes, seminars, and once you do that, then you gotta invest in taking action. Find something that you want to do and create it and use that money to fund whatever it is you want to do. Second, if you have $1,000 right now to start investing and then you can add more money to your investments every single month, now your options are a little bit different. At this point, you have a steady stream of income. Maybe you're working a job and you saved up $1,000 and every month you want to add more money to your investments. Or maybe you're running your own business and you saved up $1,000 that you can invest somewhere else, and every month you can add more money to your investments. Whatever it is, you have this steady stream of income where you have $1,000 to invest right now and you can keep adding more money to your investments. Now, obviously, the things that I just talked about always apply. You should always be investing in your education, and if you want to create more income, invest in yourself. But I want to talk more about passive investments, where now you take this $1,000 and this money you invest every single month and you put it somewhere that way now your money's out working hard to make your money while you continue to create this income stream. So you're making money from your job, and now every month you're investing money here, that way your money can keep generating you more money while you're working hard to make more money too. The first way that you can invest your money is through the stock market. But the way I want you to invest your money in the stock market is a little bit different than what most people think about when they say the stock market. The stock market is a place where you can go and invest in some of your favorite companies. So you can go to the stock market and invest in Chipotle and Amazon and Lululemon and Apple. And if you do that, you become one of the owners of Chipotle or Amazon or Lululemon or Apple. Now, when these companies make money, so do you, because now your stock price will go up or they'll pay you with dividends. But if you're investing $1,000, that's not the way that I want you to invest your money in the stock market. What I want you to do is invest your money in index funds. Here's the thing. Let's say you invest all your money in Chipotle, and then some time goes by, and then Chipotle starts releasing some really bad guac, and people start getting really sick from this guac. And then Chipotle has to declare bankruptcy because of all the lawsuits they have to go through because of the bad guac they serve their customers. If that happens and Chipotle goes bankrupt, not because of what you did, but because of their executives who drove the company into the ground, now your investment is worthless, even though you invested all your money into Chipotle thinking that they would make a great product. When you invest in individual companies like Chipotle, then you have the opportunity to make a lot of money because Chipotle can come out with a new type of guacamole and people could love it and it could double their revenue and their stock price could double, which would make you a whole lot of money. But the flip side is it also comes with more risk, because if Chipotle doesn't do good or if they go bankrupt, then your money just goes away. If you're not interested in spending a decent chunk of time studying companies, learning to invest, and reading their earnings statements, then you probably don't want to be investing in individual companies because, well, there's a whole lot more involved than just finding a hot stock to invest in. That's where index funds come in, because with index funds, now you don't have to find the perfect company to invest in. You can invest in a group of companies. Like you can invest in the general stock market, or you can invest in tech stocks, or you can invest in dividend paying stocks that where you're getting cash flow. So now you're not trying to find the best company to invest in. You just got to find what you want, whether it's dividends or real estate or technology or the general stock market, and then you can invest in that general sector. The way you invest in these funds is the same way you invest in stocks. You just go into your stock brokerage, enter whatever fund you want to buy, and then you can buy it. But I do got to let you know that you are not guaranteed to make money when you invest. You might even lose money. Even if you invest in an index fund, you can still lose money, which is why you always want to do your own due diligence, and you never want to blindly listen to a random guy on YouTube. Let me give you a few examples. Again, these are just examples, not things that you need to invest in, so make sure you do your own due diligence. If you wanted to invest in the general stock market, you could invest in funds like VOO or SPY. These index funds give you exposure to the S&P 500, which essentially means if you invest in VOO or SPY, you are getting exposure to the 500 biggest companies in the United States. Now, usually, if the economy grows, these 500 companies will grow, which means these funds will grow along with the stock market. If the economy is shrinking, these funds will go down too. If you're a big fan of technology and you want to get exposure to the technology sector, then you can look at funds like VGT and QQQ. These funds will give you exposure to tech companies like Apple and Microsoft and PayPal. So if you want to get involved in tech, this is a good way to go. Now, both of these funds are going to give you exposure to different companies. So what you want to do is actually research these funds. Just go to Google and search these funds, and you will get a whole bunch of articles explaining which companies these funds invest in. So make sure you do your own research. And then for those of you who like passive income, you can look at investing in dividend ETFs like VYM and SDY. This Y is all messed up. These funds are investing in companies that pay out big dividends, and so when you invest in these funds, you're investing in a fund that invests in a whole bunch of dividend-paying companies, and so now these dividend-paying companies are paying into this fund, which pays you. Now, the best way to actually invest your money is to create an automatic system where anytime you get paid, a portion of your paycheck, let's say 15% of your paycheck, will go directly into the funds that you want to invest in. That way now, anytime you get paid, your money will automatically go into the funds that you want to own. That way you don't actually spend your investment money. If you do want to learn more about how to automate the system and how to find a brokerage that can automatically invest your money every month or every paycheck, our team put together an amazing guide that goes through how to do this step by step. So if you want to learn more about how to do that, I will link it for you in the description below. The second way to invest your money, if you have $1,000 right now and more money coming, is through real estate, but not the traditional way of investing in real estate. Real estate investing is when you buy a property, let's say a house, and then you lease this house out to a person, and then this person lives in your house and they're going to pay you rent every single month. The problem with that is you cannot buy a house for $1,000, or at least not a very good house. But thanks to the internet, you don't actually have to buy physical real estate anymore to get exposure to real estate investments, because you can use a crowdfunding platform. When you invest in crowdfunded real estate, now you can invest a small amount of money, like $1,000, and now you will get exposure to a whole portfolio of real estate investments. So now when these real estate investments make money through rent, or when the property values of these investments go up, you'll make money too. The good thing about most of these crowdfunding platforms is they pay you with passive income, because now when these properties get rental income, you get your share of that through your passive income dividends. The downfall is your money is not as liquid. You can't just sell your investment as easily, because when you invest in real estate, now you own a physical property, and selling a property is not as easy as selling a stock, where you can buy and sell a stock in just a matter of seconds. With real estate, your money is kind of tied up for a number of years. So if you like the idea of investing in physical real estate, and you don't have the capital to buy actual properties, and you don't mind having your money tied up for a number of years, then using one of these crowdfunding platforms is a good way to go. Again, if you do want to learn more about how to actually do this and implement this real estate strategy, our team put together a guide on how to do it, and you can read the article on our website, and I'll link it for you in the description below. You can also get indirect exposure to real estate through REITs on the stock market. REIT stands for Real Estate Investment Trust, and when you invest in a REIT, now you're not investing in actual real estate, you're investing in a company that invests in real estate. So it's kind of like indirect real estate investing, because you're not getting exposure directly to the property, you're investing into the company that owns the property. The great thing about REITs is REITs tend to pay out higher dividends, so you get your passive income, because REITs are required to pay out 90% of their profits to their shareholders, you investors, through dividends. If you are interested in going into REITs, then you can look at investing in REIT ETFs, kind of like what we talked about before, and a couple examples of REIT ETFs are VNQ and USRT. If you're not too interested in stocks or real estate, then the third thing you can look at investing your $1,000 into this year is paying down your debt early. If you have a loan and you're paying 4% a year on this loan, whether it's your car loan or your mortgage or your student loan, well, if you pay that loan off 1 year early, that's a guaranteed 4% return you just got on your money, because that's 4% that you do not have to pay to your bank. So if you want to invest your money and get a return on your money, but you don't want to put your money in stocks or real estate because you're not a big fan of risk, and you don't want your money just sitting in your bank or a CD somewhere that's not earning you a return, then you can use your extra cash to pay down your debt early, because that's going to give you a guaranteed return. The faster you pay down your debt, the less interest you have to pay, and the faster you can be financially free, because now anytime you make money, you get to keep more of it. If you enjoyed this video, here's a video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. Even if you're too smart for penny stocks and you're investing in well-established companies, chances are you felt the pain of investing in a company and then you see your stock go down. I mean, that's why so many people are searching, why do stocks go down when I buy them on Google?